Affordable Care Act Basics. Beginning in 2014, taxpayers were required to have health insurance with minimum essential coverage. Those that didn't have minimum essential coverage from another source, such as employers, government agencies, or individual purchases, may choose to purchase health insurance from the marketplace. If their income is low enough, they may qualify for a government premium subsidy called an advanced premium tax credit. This credit must be reconciled every year it is received on the person's tax return. If they did not have this insurance and did not qualify for one of the many exemptions offered, they were required to pay a penalty. This penalty was sometimes called a shared responsibility payment, a fine, or an individual mandate. This penalty began in 2014, maxed out in 2016, and then had a significant change for tax year 2019 in that the penalty ended. What are you going to do if you're preparing a 2018 tax return? First off, see your site coordinator. Each site has copies of the previous year's Pub 4012s available to complete these returns. If you are preparing a 2017 or a 2018 return, be sure to include a returning volunteer or your site coordinator. They will assist you in calculating the penalty or, better yet, researching an exemption for the taxpayer. All sites will have a copy of previous year Publication 4012 available either in PDF form or a hard copy for you to use when working on the insurance section. Each site coordinator and returning volunteers are well versed in the ACA, so there is no need to panic. Help is available. The maximum penalty was $695 per adult, or 2.5% of the yearly household income. A good share of our clients qualified for an exemption from paying this penalty. As an example, the state of Wisconsin did not expand Medicaid during the period when the federal government offered that benefit to the states. Therefore, one of the most common exemptions was for taxpayers who earned less than 138% of the poverty level because Medicaid had not been expanded in their state. These exemptions are listed in previous years' Pub 4012, and each site again has access to these in PDF format. After finishing the federal entries in TaxSlayer, you will need to move to the health insurance section. If the taxpayers did not purchase insurance through the ACA, also known as the Marketplace or Obamacare, check the No box and you are finished with the health insurance section. If insurance was purchased through the Marketplace, they possibly received an advanced premium tax credit, also known as the PTC. This is an advance on the government subsidy, which is paid directly to the insurance company. This advance is calculated using the taxpayer's income and family size. Each year the taxpayer has health insurance purchased through the Marketplace, we must do a reconciliation which generates IRS Form 8962. This issue requires advanced certification and may increase or decrease the taxpayer's refund or balance due. However, for tax year 2020 only, any premium tax credit owing was waived. Taxpayers will be charged repayment again in 2021 taxes as well as those years prior to 2020. There are certain qualifications that taxpayers must meet in order to qualify for the premium tax credit. They must buy from the Marketplace. They cannot file as married filing separate unless an exception applies. They must be a United States citizen, national, or a lawfully present alien. And new for 2021, their modified level of income has been eliminated. For years prior, they needed to have income below 400% of the federal poverty level. Some unusual instances are out of scope. Make sure you look at Pub 4012, page H14 for more information. If they did purchase insurance through the marketplace, they will receive a 1095-A. This is what the Form 1095-A looks like. In this case, we need to do a premium tax credit reconciliation. Section H in your Pub 4012 will walk you through this. It looks complicated, but it is not. We do need this form in order to prepare their taxes if they received insurance through the marketplace. Another issue you may come across would be those policies that list a person who is not a covered person on the tax return. One example would be a child who is still on the parent's policy but is no longer their dependent. You will find guidance on this issue in tab H of Pub 4012. For tax year 2021 only, unemployment insurance will be treated as income no higher than 133% of the poverty level. TaxSlayer will calculate this for us when we check this box yes. Continue on down the page, checking the appropriate answers to the following questions. This is one of the 2 reconciliation sheets we use. If the coverage for all the months have no changes, you may enter the totals from the 1095-A in the appropriate field. This is the second reconciliation screen. We enter the monthly figures here if there have been changes. These figures are obtained from the 1095-A we receive from the taxpayer. We absolutely need this form or the figures. The telephone number for the marketplace is 1-800-318-2596. The taxpayer can call this number and the marketplace will give them the information needed over the telephone.